The S&P 500 dipped 2% this week. Volatility seems to be going up. Is the current bull market over?
MomentumStockScans.com.
Hey, it's Winston with MomentumStockScans.com. And this week was a pretty intense trading week. The S&P 500 fell 2%. Some people are starting to wonder whether we're going to see a major decline or correction in the stock market. So far, every dip has been bought, but is that about to change? As you can see here on this chart, the S&P 500 has been maintaining above the 240 level near the all-time highs, but it's making some lower highs as we go on, and maybe this is the beginning of a small crash that's about to happen. So I was wondering, where are we in the context of a bull market cycle? So a common idea is that a bear market is a 20% decline or more in the stock market. And if you go only 10% down, it's just a correction. But they often use that to denote the beginnings and endings of bull and bear market cycles. So I went back through the charts over the past 25 years, going back to 1990, and I took every major bottom of a 20% or more correction as a bear market from the peak to the bottom. And then at the end of every bear market, which was that bottom, that lowest value that hits, I count it as the start of a new bull market. Here's a chart of my findings, the many cycles that we've had. And what's interesting is that according to this, a typical bull market lasts on average about 230 weeks, which is about 4.5 years. And typically the stock market, the S&P 500, advances anywhere between 70 and 300%. So by this measure, the current bull market that we're in is about 300 weeks old. So it is a rather old bull market, and it's advanced about 128%, which seems right. We could be at a top. But another thing interesting to note is that while the media likes to say that the typical bull and bear market cycle is 5 to 7 years, actually the current bull market is not really 8 years old, because if you go to 2011, there was a 20% drop in the S&P 500 during the U.S. Treasury debt crisis. So I really think the current bull market cycle began in 2011. So why is it important to look at the bull and bear market cycles? Well, I believe like anything, like many things that occur in nature, the stock market goes through cycles. It seems very ordinary, like the economy, for the stock market to advance, to grow, to have a bull market. And then you have a period of retraction, kind of like an economic cycle, like a recession type of thing. So you have an expansion of the economy, you have a contraction of the economy, and the same thing happens in the stock market. However, I think when it comes to trading, bear markets serve a very important purpose. You need a bear market once every few years to flesh out all of the weak-handed would-be sellers in a bear market. So as the stock market's going up, you have an accumulation of people chasing the money to be made, and you could probably call this the dumb money, but it fuels the final stage of the bull market. And what happens is all of the stocks that get saturated with buyers, everybody who wants to be long is already long, and there's nobody left to buy. When you run out of buyers, then stocks tend to crash. So what you need is a bear market every once in a while to knock down the valuations, to make the stock prices attractive again, and to get all of those people, the dumb money, to get their money out so that they could buy it again in the next bull market cycle. So bear markets are very important because they provide buying opportunities for institutional investors, people who are fundamentally driven. While the current bull market could be argued that it began in 2011 or 2008, I think in the context of looking at bear market cycles as a necessary evil for resetting the stock market, I actually think we had a reset of sorts happening with the stock market crash that occurred in August of 2015. If you look at what happened in 2015, the S&P 500 had multiple strong dips in which there was a lot of there was a higher volatility, and I think this high volatility action was the sort of trading that shakes out the weak hands and makes valuations more attractive for long-term investors. Also, the bull market that we're in didn't really get going until after the 2016 election season was over. So it seemed as if there was a definite overhang on stocks. Stock markets don't like uncertainty, and this election season had a lot of uncertainty. When that uncertainty was lifted, that's when stocks began taking off, and that's why I like to call it the Trump bull market. So is there any historical comparison to the Trump bull market that we're in now? Well, if you go back to the charts, back in 1994, we had a very rough year. It was very similar to the trading action that happened in 2015, 2016, where the market was down pretty significantly, but not really enough to call a bear market. It was just churning around down in a major, long-lasting correction. At the beginning of 1995, after the midterm election season was over, stocks suddenly taking off, setting up for a 3-year bull market run. And in context, this was part of a very long-lasting bull market that actually began in 1990 and lasted until 1998 when there was a currency crisis. So that was an 8-year, 400-week bull market. If you look at this chart, it shows you where we are right now with the Trump bull market in relation to the choppy market of 2016 and 2015, comparing 1994 to 2015. Now, given that the Great Recession happened a while ago, I'm not quite certain that there's a lot of room left for the Trump bull market to run, but I think we are likely going to see some new highs. So, if you liked this video, if you thought it was informational, please like and subscribe to my channel. I plan on posting a lot more content, and in particular some videos showing you how to find the best stocks to trade using MomentumStockScans.com. I'm going to have that content soon, so subscribe, and I'll see you next time.